Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour Show. Wow, what a day in the market. Yesterday was the big day with the Fed speaking and talking about increasing the rates of everything, right? Inflation's up and they're going to start jumping up in rates. So we're going to talk today about the Fed's credibility. That's one topic. I also want to do a deep dive on Adobe. That was a big letdown, but also there was another one that I want to do a deep dive on. It will be a fun one. It's probably one that's not too familiar with many people, but it had great earnings and it had a great report. And I think this stock can move in the conditions that we find ourselves in the market. So a lot to talk about today. And with the stock market just totally reversing itself from early morning gains to losses now at the close, Webull, folks, has a special promotion for December. It ends on Christmas Eve. It ends on December 23rd, actually the day before Christmas Eve. You can get 5 free stocks from Webull. You open an account and you deposit any amount, $5, $100, any amount, and then you get 5 free stocks. It's free money, folks. Very easy to do. You can actually click the second link in the description of the video, and I'll actually here post it now in the stream in the comment section. Click the link. It's tickertimenews.com/Webull, and you can sign up to get 5 free stocks. Free money. Okay? Sign up for an account, deposit any amount, and get 5 free stocks. Free money. In a day when the market is red and maybe some of us got some losses today. I know I did. I got a couple losses today. Free money never hurts. So do this special promotion, 5 free stocks. It's amazing. I have not seen them do a promotion with 5 free stocks before, but yeah, get this free money for yourself. And Webull is a good platform. It's what I use when we're talking about different stocks here, right here. This is an example of Webull on the desktop. So it's a good platform. It's a little more, it's got a few more bells and whistles to it than, say, the Robinhood app. The Robinhood app is just plainly simple as all get out. The Webull app, though, it has more charting features. It's got more bells and whistles to it. You get more information when using it. But yeah, they're running a promotion right now. 5 free stocks. It's free money. Definitely check that out if you haven't already signed up for a Webull account. And again, it's the second link in the description. And I also posted the link in the live chat right now. tickertimenews.com/Webull, 5 free stocks. All right, now that I plugged that, free money for all of us. Remember, this live stream, the most important thing about this live stream is what's on your mind. If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. That's right. This show is for you. The whole goal, there's no hidden agenda. It's simply financial freedom through education. That's it. It's as simple as that. All right, so while you get your questions ready to go, I'm going to jump right into it and talk about the market today. And then, of course, Rivian's earnings came out. They've got some a boost in reservations, so we'll talk about Rivian as well. We'll talk about FedEx earnings, and then we'll jump into my deep dive on the Fed and Adobe and another surprise for you. Okay, so we know in the market today, stocks fell sharply today as a sell-off in tech stocks triggered by expectations of higher rates, I guess, finally sunk in to investors. And it outweighed the gains in some stocks that should benefit from economic growth. The Dow Jones shed more than 100 points after adding nearly 200 points earlier this morning. Meanwhile, the S&P 500 dropped more than 1%, and the tech-heavy Nasdaq plunged almost 3%. The session was marked by losses in big companies such as Apple and Tesla that slipped more than 4% each. Boy, oh boy. Yeah, I see your comment there. Rivian is tanking. We're going to talk about Rivian's earnings in just a moment. But yes, we're going to get to Rivian and talk about what's going on with Rivian. So with those sliding by more than 4% each, Tesla and Apple, I don't know, let's call it the semiconductor related stocks, they all plunged as well, with Skyworks dropping almost 9%, Nvidia 7%, and AMD erasing almost 6%. Also, Adobe shares led the losses after sinking 10%. And I'm going to do a deep dive on Adobe later on in this live stream. As investors were slowly coming to terms that the Fed rate hikes next year are imminent, as early as maybe March or April. The U.S. Central Bank did announce Wednesday a faster wind down of its pandemic-era stimulus and signaled the 3 interest rate hikes by the end of 2022. And we talked about that. Right now, it's at 0 to 0.25%. The first rate hike will take us up to 0.25% to 0.5%. Then the next rate hike, 0.5% to 0.25%. And then last, the final rate hike for 2022, 0.75% to 1%. So by the end of 2022, we should be near 1% with interest rates. And right now, we're near 0. So they're aiming to ease ongoing price pressures as the economy nears full employment. Moreover, the pace and ease at which the growth stocks retreated supported my suspicions that yesterday's rally was fueled by short covering activity. That's right. With the with the rise in stocks after the Fed meeting yesterday, the whole reason that happened, this is my belief, my suspicion, is because shorts were covering their positions, pushing stocks higher. That ended today. And then we had the sell-off. Now, the heavy-weighted S&P 500 information technology sector down 2.9%. Consumer discretionary down 2.2%. Those are the 2 sectors that tumbled the most. The value-oriented stocks, though, extended gains. It's just that those mega cap losses diminished their positive influence. 8 of the 11 S&P 500 sectors, including financials, up 1.2%, materials up 1%, and energy up 0.7%, were the 3 that closed the highest. The Russell 1000 Value Index, it actually gained 0.5%. One positive note today was that housing starts and building permits for November were better than expected. Okay, let's just hop right over to Rivian and look at that. I'm going to hop over to TradingView from Webull. Don't forget your free 5 stocks with Webull. The link is in the live chat and the link is in the description below. TickerTimeNews/Webull. 5 free stocks. It's free money, everybody. Okay, over to TradingView here. Rivian, RIVN, and then we'll come right back to Bitcoin and Ethereum. So Rivian announced their earnings today. They were down 5.3% during regular session, and they're down 9.25% right now in after hours. And this is all due to earnings, okay? Now, Rivian, they reported their first earnings report as a publicly traded company. It's always the most important earnings typically of a company's public history, because we finally get to see behind the curtain, right? So the losses for the quarter, they were totally expected. We knew Rivian was not making money. But one of the highlights is that the company has on its books 71,000 R1T pre-orders on the books, and this is as of December 15th. Now, as for its EPS, this would have been their third quarter, and their EPS of a loss of $12.21. Now, that missed expectations by $5.53, but this is a new company, right? There's not a lot of analysts who have a perfect model for how Rivian is going to work as a company. So you can't really rely on hit or miss on these expectations for a company as new as Rivian in a brand new sector, right? We only really have Tesla to go by. Now, on revenue, they had $1 million of revenue, and that missed by about $30,000. So not too far off there. On the production front, Rivian says it will produce 652 R1 vehicles through December 15th and delivered 386 of those vehicles produced. The electric vehicle maker plans to expand annual production capacity to 200,000 vehicles a year out of its normal guidance that it gave. Okay, so a year out, 200,000 vehicles is what they plan to be producing. That doesn't mean from now 12 months. That means in 12 months, they will be able to expand their capacity to that amount. Now, they have a plant in Illinois right now. They also confirmed that it will begin construction of its second manufacturing facility in the summer of 2022. Excuse me. So next summer, this coming summer, they will begin building a second manufacturing facility. Now, annual capacity at that new plant will be expected to be around 400,000 vehicles, okay? The operating expenses in Q1 were $694 million. R&D, research and development costs, were $441 million. Rivian booked a loss of $776 million for the quarter. Rivian ended the quarter with $5.2 billion in cash, which was before the IPO proceeds came in. So there is still more money out there on the table for Rivian to bring in from its IPO. So that's a good thing. So they have cash on the books, $5.2 billion right now, plus whatever proceeds they get when they finalize the IPO process for them. Now, the company is sinking. No shock to me. It's down now 11.8%. It was 9.5% when we first started talking about it. It's now down another couple percent. This is not shocking. We've been talking about this for a long time now for Rivian. These lines that are on this chart, they have been drawn since the first couple of days that Rivian IPO'd. Now, I have down here, right here, this line at $100. And my belief is that under $100, and you can go back and watch all 51 of our live streams that we've done in a row now. I've always talked about this $100 mark, and that being the point where you could start adding Rivian. Anything above $100 was way too out there for me. So under 100, that's when you can start considering to open or add to your position. Rivian in after hours now that it's down 11.8%, it's under that $100 mark. It's down to 96.3 $96.50. It's now down 11.3%. So a slight little bounce there. I would not be surprised if there was a bounce under $100. That would not surprise me. Now, Rivian was trying to build some base support right here on the chart with a low of about $110 with a high of about $115. It was trying to build some base support there. But that was before the revelations of earnings, right? So now people are selling off, and I believe people will buy the dip on Rivian under $100. And it seems like that may be starting to occur right now, potentially, okay? I believe it's a high probability that it will bounce under $100. I don't know how low it'll go, but I think it will bounce somewhere, maybe in the 90s. Maybe it could get as low as the 80s, but I really think in the 90s, I think, is a spot where you could consider buying Rivian if it fits in your portfolio, and of course the risk reward benefit for you. Yeah, Rivian's tanking. Yeah, we just okay. What is going on with FedEx? It's on track. I'll take that as a T. Track with the swings. Okay, we'll look at FedEx in just a moment. Tesla filling the gap between 9.10 and 9.25. Yeah, Tesla needed to come back down. TSLA for Tesla. On TradingView. There's actually a link in the description for a free account to TradingView. It's where I do all my charting from. So if we look at Tesla, this is the daily chart. Now, Tesla was down 5%. Now, I've talked about Tesla many times, and this big run up that Tesla had right here in October, okay, and at the beginning of November, this big run up, it needed to find its support. It needed to build up a base, okay, and that's what Tesla is doing now. So ever since reaching this all-time high for Tesla, it's been in a downtrend. It had a little rebound here towards the end of November, but it is trending down now, and that's not surprising. I think it could probably come down 885 is where I kind of have my line in the sand, if you would. I think that is an area where support would really come in for Tesla. $885. I've had this line drawn for a long time now. And if we go back and look at October 19th, October 18th, it used it as resistance, right? That 885. And then on October 21st, that's when the big rally happened. And that's when it broke above that 885. And then there was a gap up from 908, and it gapped all the way up to 948. That is a very big move, a very big gap, okay? So 908 to 948. It jumped by $40. That's a big jump. So it's got to fill this hole back in at some point, and I think that's what it's doing right now. So it could come all the way down to 908, maybe flirt around with that $900 level, because remember, investors are always psychologically, unconsciously thinking about even numbers. And that $900 level is just so easy. It's so simple to see, right? It's easy to see, $900. So I think it could flirt around with that. But if it can continue to fall, I think it'll go down to the 885 area. And that's where it would find some real support right now, okay? So your question about filling the gap between 910 and 925, yes, I believe it will continue to come down to fill that gap. Because 9 times out of 10, it doesn't happen every single time. It's not a guarantee, but usually when a stock gaps up, it has to come back down and fill that gap. And usually if it gaps up, then it's going to come down to fill the gap. If it's a gap down, then it's usually going to go up to fill the gap. Will FedEx hold after hours into open, or will it tank back down before open? All right, we'll pull up FedEx right now, and we'll look at FedEx and talk about their earnings as well. All right, FDX is FedEx ticker symbol. Did I not type that in right? Yeah, there we go. Okay, all right, so FedEx, they were down 1% today. They are up 6.8% in after hours, okay? Now, this is a daily chart. I'm going to squeeze it in here a little bit so you can see this trend that they've been in. They've been in this downtrend now since May of this year. It really turned it around here in October, and it had a beautiful October rally, and then it slipped, right? Now it's teetering on that, it was teetering on that 50-day moving average, but now, and let me mark this, now it's all the way up here, okay? This is where the stock price is right now. So it's made this gap up to $953.50, okay? Now, for FedEx, their fiscal year Q2, they had an EPS of $4.83. That beat by 54 cents on revenue of $23.5 billion. That was a 14.1% year-over-year gain, and that actually beat by over $1 billion. They beat on revenue by over $1 billion. That is really good. Now, operating income, that increased 33% for FedEx. That was also good, with an operating margin of 14.7%. Now, they say that was driven by a continued focus on revenue, quality, and profitable growth. So those are good things out of FedEx. I have not had time to read over the earnings report and definitely haven't listened to the earnings conference call yet, but I will do those things later on this evening. But that's the early information that we have off the top for FedEx, and that's why it's reacting so positively in after hours right now. Again, it's up 6.2% in after hours off of good earnings and good guidance. Okay, what's up? Yep, how you doing? Let's see here. RIVN, check. Tesla, check. FedEx, check. Let's go to Nvidia. NVDA for Nvidia. NVDA. Let that load there. Okay. All right, here's Nvidia. All right, they were down 6.8% today. Now, the semiconductors took a hit, and it's not surprising, okay? And the reason that it's not surprising is because they went on a big run. AMD was down today too, but they went for this big run right here at the very beginning of November, all the way through October. I mean, Nvidia was out of its channel down here at the bottom at the beginning of October, and it just ran right through its channel, popped out, and then exploded up. And a lot of that had to do with earnings and also the whole metaverse talk, right? Because Nvidia is like the backbone for the metaverse. The metaverse needs those processors, all that memory, and all that computer hardware in order to function. And Nvidia will be a part of building the metaverse. But the problem that Nvidia faced is it ran up really fast. And whenever you see companies run up really fast, that typically does not hold. And I've been saying since the very top of this that Nvidia will come back down to its channel. And I still believe that. I should definitely believe that with it falling 6.8% today. I think it will get back into its channel and trade within this channel and then slowly start to move up. But remember, Nvidia may not be in this category, but companies that are considered growth companies, which Nvidia pretty much is considered a growth company, it's just a less riskier growth company. If you make something, Nvidia makes something, you will do okay in our new environment of rate hikes and QE easing. All right. The other companies that don't make something, that have a lot of cash, those are the companies that will get hurt the worst in this new environment that the Fed has created for us. And I want to talk about the Fed. I've got a few thoughts on the Fed's credibility right now, and it's in the gutter. The Fed's credibility is in the gutter, and I do want to talk about that in today's live stream. Okay, let's see here. Why was there such a spike down on FedEx on the run-up? I feel like one whale is doing all the buying. Okay, with FedEx, I don't believe that there's a whale doing anything with FedEx. It's too... Let's go back to FedEx, right? Well, first, let me just finish my thought here on Nvidia. Nvidia, I believe, will continue to come back down into its channel here. If I extend these lines out a little further, this is where Nvidia is going to come back down and start playing in, right here. Its 50-day moving average is at $277 right now, and I do believe it's going to come back down to that 50-day moving average. It's just a few bucks away, call it $5 away from that 50-day moving average right now, and that would put it back in its channel. I believe that's where it's going, okay? So it doesn't have much more of a drop to go to get there. All right, let me go back to FedEx, FDX, for just a moment. FedEx here, let me open this up. Let me open this up for you. I'm going to go into the 1-hour chart so we can look at this a little bit clearer, okay? A little more detail. Okay, so here we have FedEx. I want to get, that's December. Let's get today. 1-hour chart, so it's only going to be just a few candles here. All right, so let me put a circle around today, which is the 16th. We go up, this candle here, back across, down. All right, this right here is today, okay? This morning, stocks were green, okay? FedEx even ran up this morning, and it ran up to its 200-day moving average. The moving averages, like the 200-day moving average, the 50-day moving average, and the 21-day moving average, they all act like trend lines that you would normally draw on a chart. Support lines, resistance lines. These moving averages act as support and resistance. Right now, the 200-day moving average is acting like resistance. Back here on December 14th, it acted as resistance and kept FedEx down. Now, if there was a whale doing some mysterious thing, it would look totally different. If we just, for just a moment, look at this. Today, we had volume of 4.3 million. So 4.3 million shares traded hands today. The average is 1.9 million. So there was a lot of added activity today in the market for FedEx. And that is typical whenever you have earnings. There's always greater volume on earnings. Now, people were starting to get nervous right here. The whole market. This wasn't just a FedEx thing. This was a whole market. FedEx hit its 200-day moving average, and then it fell for the rest of the day. Now, if we measure this fall from that candle to this candle was only 2.4%. That's not a big move, okay? That would be an average move. A big move is like 5%. 2.5%, that's an average move. 1%, a small move, okay? Especially for a company like FedEx. It's got a market cap of $63 billion. Now, with FedEx, though, we have to remember it has moved in after hours. So if we look at where it was at the close down here, and it was only down 0.9% during regular session hours. It was right here at the bottom of this purple circle. But in the after hours, with the positive earnings results, the stock moved from down here and it went all the way up to here. And this is where it is in the after hours. This is not a whale just buying shares of FedEx. This is market participants, many thousands of people buying FedEx on strength. Now, if we go back to the one-day look for FedEx here, FedEx had this nice big rally all of 2020, and then it's been trading flat now for a while. And if you really want to put it into perspective, if we go back here to October of 2020, it's been trading in a range and has been range bound since October 2020. So this move, in the grand scheme of how this stock has been performing overall, like over the past year, is not that big of a move. Now, when we looked on the hourly chart, it did. A 6% move did look big. But on the daily chart, it doesn't look so big in the grand scheme of things. I mean, this stock, it can go up over $320 a share. And my personal view on FedEx is that FedEx is in a really good position right now. And I believe FedEx will continue to move and continue to rally. That's my belief. Their financial structure, their inner workings, they've changed a bit internally as a company. And they've become more focused on being efficient. They've become more focused on profitability. They've become more focused on high quality service for high quality revenue. And if you look here, the two earnings before today were misses. They missed EPS, which is how much money you're bringing in as profit, by 10%. Before that, they missed by 0.2%. That wasn't really a big miss, but it was. So they've improved that very nicely, up 12.9% for their earnings, up 4.8% for their revenue. So the company has turned around, and that's the rally. It's not a whale doing anything to FedEx, in my opinion. Okay. So Ally versus SoFi, I picked SoFi, but Ally is not a bad situation either. Let me put Ally up here. I'll go to Airbnb here in just a moment. Then we look at Ally and SoFi. Now, here's what I have for Ally Financial. All right. I believe that in this falling wedge pattern that they're in right here, I think they could, and I drew these lines a few days ago. These lines that I drew here are kind of the direction that I think Ally could probably go in as a stock. I could see it come down lower. It's under its 50-day moving average. And if you watch this channel regularly, you'll know that I always say when a stock or even crypto, whenever it's below the 50-day moving average, that is a negative or bearish sign. When it is above its 50-day moving average, that is a positive or bullish sign. So keep that in mind too. It's a very simple rule to use to go by. And right now, Ally's under that 50-day moving average. But I think Ally can really benefit from the rate hikes. I really think it can. Now, this is a regional bank. And right now, regional banks, I think, have the biggest potential for outperformance than the big banks. And a couple days ago, before, I think it was on Monday, we talked about which banks are poised to do the best and why they're poised to do the best. And if I look here for just a moment, on my phone here, just a quick moment here. I want to look up something. There's an ETF. It's kind of risky. Let me pull this ETF up. It's DPST. All right. This ETF is betting on regional banks. The one thing that I find interesting about this particular ETF, this is a leveraged ETF, okay? So if you think that regional banks will do really, really good in this environment that we're in, this is a very bullish ETF that is leveraged 3 times over. So if regional banks do good, then, for example, if regional banks in a typical ETF go up by 1%, this one's going to go up by 3%. But it can do the opposite. If regional bank ETF goes down 1%, then this will go down by 1%. But I own shares of this ETF because I believe regional banks are going to be big winners with rate hikes. And that's where Ally comes into play. I just want to point that out. This isn't a type of ETF that's for everybody because it is leveraged. And it's leveraged 3 times over. So just want to point that out there. So I do like Ally. I think Ally is a safer choice over SoFi because SoFi, it doesn't have its bank charter yet. Once SoFi gets that bank charter, then it is going to take off. Now, I also own SoFi. I like SoFi. I actually have to move this chart here. It was down 5.8% today. So on Ally versus SoFi, Ally as a regional bank, I like. I think Ally is going to be more of a gradual mover, while SoFi can have bursts of movement, right? What was Ally today? Ally was down 1% today, while SoFi was down over 5%. So that's what I mean when I say Ally will have more gradual movement, while SoFi will have those bursts of movement. So I like both of them. I really like SoFi. Once SoFi gets its bank charter, and there's been no news to my knowledge of the bank charter, except for when the CEO of SoFi talked last month at a conference. The bank charter was brought up, and the CEO talked about all the positive things a bank charter would do for SoFi, but never said that we are guaranteed to get it, that we are going to get it, or that we have it. But it can help SoFi lower their costs, and it can help SoFi have a larger margin. Okay, it can make more money with the money it has. So a bank charter is a big thing for SoFi. Right now, though, I don't know where the bottom might end up being. If we look here at SoFi, it tries to it's really tried to build a support area, around 1350 as a like bottom for SoFi. But it's really holding up to that $14 area. Like, for example, the lowest it has gotten in the past couple of months is $14.02. So it seems to be holding up around there. But again, I mean, it has gone as low as 1350. So just keep that in mind. It may not be at its bottom yet. I know that probably doesn't help answer your question because I like both of them. Here's probably how I would decide which one to go with. Would you rather have one with lower risk and a gradual move, or would you have one that has greater risk but greater reward that can move with bursts of energy? Because once the bank charter news comes out, that's really going to shoot SoFi to the moon, as the saying is, right? Okay, so hope that helps with Ally over SoFi. Airbnb, I like Airbnb. ABNB is a ticker symbol there. I like Airbnb. I think it has, it's got something special. Now, Vacasa is also one that I like. Hold on one quick second. Vacasa is also one that I like. It's a competitor to Airbnb, kind of. The difference is Airbnb doesn't own their rental properties, but Vacasa does own their rental properties, and they have got a bunch of them. But yeah, so let's find the support and resistance here for Airbnb. All right. So whenever you're looking for support resistance lines, you want to make sure you find places that have the most contact points possible. So right here is an area, the 160 to 161. That's an area that has many contact points where it's bounced from. Obviously, it's below that right now. So we got to dial this in a little bit more here. It's also tough to find bottoms on companies that haven't been public too long. I know they've been public for over a year now, but it hasn't really built up a base of support yet. Except I would say that this area here, 160 up to 168, they were really trying to build a base of support up there. Let's see. It looks like the next area to find any type of support here for Airbnb is probably the 150. Looks like there's a lot of touch points there on 150. And then to make a range of that, it would probably go down to 146. So that's probably my range right there. I'll change the colors there to red because I think that could be the bottom. But then again, nobody can call the bottom. But I think that's a good range for lower support for Airbnb, and that's 146 to 150. It's got support here back on August 5th through, what do we have here? August 16th. So a good 6 days there. And then we have this next area going back to June 1st all the way to July 14th. It really liked to play around and bounce in that area. And then if we go back further to when it became public, that really doesn't count because the stock is just moving rapidly without any fundamentals at all at that point. So I won't put anything into what happened back at its IPO there. All right, so that's probably an area there, but I really like the area of the 160 to 168. It was really trying to build up a base of support there. So if it bounces, maybe it comes down and bounces off of this this 146 to 150 area. But remember, this is also a growth company, and it's a company that really is depending on the economic recovery and travel, people getting out there again. So a lot is going to depend on what the economy is doing for what Airbnb is going to do on its stock chart. Now, long term, I think Airbnb is a winner. I think it can long term be a good play. But this is not one that I think you could buy and swing it. You got to have a long term investor mentality for investing in Airbnb because it's going to be volatile. It's going to move all around, but that gives you opportunities to build out a position. Take baby steps into a company like this because you don't know what it's going to do because it can react. And I mean, look at it down nearly over 7% today when you count after hours movement too. So that's Airbnb. I think it's got that level down here, 150 being the top, 146 being the bottom. I think that range was really trying to build some support here, right in the middle of this chart. So that's what I would call for a support area for Airbnb. But then again, this upper support area here, which it's now fallen out of course, but the 160 to 168, I think also was trying to build some base there. Okay, next up, InMode, INMD. Let's see how they've been doing. I haven't checked in on them in a while. Okay. Well, this is one here that we obviously were talking about. We've got a circle on that 200-day moving average, and we've got this support range area that it's really stayed in. That's been a good call there. We had a range here, 65 up to 68. That was a range that I thought it could stay in. It was a good range for it. And it did pretty good. It's down to 63.97 right now, so it is a couple bucks less than $2 out of that range. This one too, this 200-day, like the whole reason I circled 200-day moving average here is because with a company like this, it could come down to that 200-day moving average and test it. That is a very likable possibility there. Let's see. Volume was slowing down at that point in time. RSI was also dipping. We can remove those for now because everything is constantly changing. Right now, if we look at this volume here, let's see, what was this average? This was 2 million, And then yesterday was 1.9 and today was 2 million. So volume right now is average. So it's really holding that 2 million trades per day for volume. So that's not bad. And the RSI right now is at 29. So it's oversold right now. But it looks like, what was this number here? This was 33. So it's been bouncing around this 30 point range here on the RSI, being oversold and then just slightly above oversold now, going back to December 6th. So it's been like that for several days now. I still think this range here, 65 up to 68, is a range there, but I do think it could come down and test the 200-day moving average. And right now, the 200-day moving average is sitting at 58.38. 58.38, and it's at 63.97. All right. So that's in mode. Nothing's really changed here, in my opinion. Except for, instead of volume and relative strength both going down, they are now holding flat, which is good. That means there is a potential that it could reverse at any moment, which is a possibility. Okay, so that's the structure here for in mode on the stock chart. It's approaching strong support level at $60. 60 was your question mark. I think 58 is going to be a little bit of a potential test. Yes, I can see where there are touch points at $60. Let me just go back here a little bit further. Okay. Now, at the $60 level, there are a couple of points of contact. There are 1, 2, 3 at 60. If we go up to 62 or 61.50, we actually get 1, 2, 3, 4, 5, 6 touch points there at $62. So we could probably put a range here at the 62. What is it? 62. Yep. We can take it to 62. And I'm going to put these in as red. And then I'm going to go to the 200-day at 58. Put a red line on both of those. So this is a low area right here where I think it could come down to. And this might be an area where it could bounce from. But if we go back here, there was support for that, and there was resistance for that as well. So 58 to 63, 62 for in mode. So I think it's just 60, yes, but I like to give ranges because it's never really it's too difficult to be specific on this exact price point, if you understand what I'm saying there. So there's the range for in mode. 62 to 58 is probably the where it's got some bottom potential, because RSI is oversold right this moment, but it's right on the borderline of being oversold. It's only oversold by 1 point, and that 200-day moving average comes up to that point. So we can just move this up to like right there. All right, from the last time we looked at it. Okay, all right. Amberella, this is, could you help me understand the action on Amberella? Amberella is a company that I absolutely love. I absolutely love Amberella. Now, since Amberella is a growth company, it's going to get hurt with the Fed's announcement of raising interest rates. So Ambarella was down 14.2% today. I'm just looking to see if there was any news specific to Ambarella today, or if this is just action from people taking profits from its ascending trading channel here, or is it something else? So let's see here. Ambarella and AutoBrains, developer of first-of-its-kind self-learning artificial intelligence technology for assisted and autonomous driving, today announced a collaboration to develop a scalable range of advanced driver assistant system solutions, that's a mouthful, for the automotive mass market that will be demonstrated during CES in Las Vegas. Currently, the companies have developed an 8MP front ADAS solution, 8 megapixel. Remember, Ambarella, they build cameras, and they build cameras for computer vision. They also build cameras for artificial intelligence, AI. So Ambarella is definitely one I am holding for the long term. Okay, remember, it's a growth company, and remember, in part of Ambarella's growth story, several years ago, Ambarella used to be the maker of cameras for GoPro, right? And then Ambarella decided that they wanted to change their business model completely. So they cut ties with GoPro to focus, instead of consumer products, to focus on AI, computer vision, and applications in security cameras. Okay, they wanted to build a higher quality camera, and that's what they did. They built a much higher quality lens. It's being used in autonomous driving. It's being used for AI. It's being used for computer vision, and it's being used for advanced surveillance security systems. Like, for example, satellites looking down on Earth, Ambarella cameras. Okay. So it's a company that is setting itself up for the future of where we're going to be, not where we're at, which can hurt the stock in the short term and provide a lot of volatility in the short term. Just look at Airbnb, all the volatility in that stock, right? But Ambarella has, their last earnings report was really, really good. It shows that the company has finally reached that point where it has turned itself around. It's no longer a company searching for itself, trying to figure out, what are we going to do next? Where's the next way? Where's the next path we're going to go down? They have that path. They're on that path. So this company looks good to me. And today they announced this first of its kind, what did they call this? Collaboration with AutoBrains. And they're building a first of its kind self-learning AI for autonomous driving and assisted driving. Now, that 8 megapixel camera on the ADAS, that's the advanced systems in a car, you know, your auto brakes, right? And they're going to target a uniquely compact single box form factor. So that's pretty big news. And that came out today about Ambarella. So actually, that came out at 6:02. So just about 20 minutes ago, this news came out. So that is really good news for Ambarella. And again, that just came out 20 minutes ago. And they're going to showcase this at the CES, which is the Consumer Electronics Show in Las Vegas. So that's cool for Ambarella there. Let's see here. Other than that, I've got to go back to December 1st to find anything else about them, news-wise, that is. Okay, so right now, Ambarella is falling because of the market, not because of any fundamental change to the company, okay? So this 14.2% move down today is all because of the overall market, and it has nothing to do with Ambarella's fundamentals. The company is still strong, but it's a growth company that has totally changed its business model and its product categories, and it's going to take some time to really hammer out the company. But it's turned around, and right now this is just a market overreaction in Ambarella. Okay, it does put it below its 50-day moving average. The last time on November 26th, it did dip below that 50-day and then came back up the next day. So it is possible, but it's also possible that it could move lower. I don't think it could move too far lower. That 200-day moving average is at $127. Maybe that could be a low point, but it's really starting to try to build base support here. I'd probably put it at $170 right here. I'll put a line there. 170, and probably go up to 180. And this is going to be the area here where it looks like it's trying to build up a base here. I'm not going to make those lines red because it is still far off from its 50-day moving average. I mean, its 200-day moving average, and it is under that 50-day moving average. So this could not hold, but this looks like a range that it is trying to build some sort of base support here, which would be really good. And that would be a good place to do it, I think. Okay. I do not think Ambarella is going to get back into its trading channel. I think this was just a boost from earnings that it rode on, and now it's just going to consolidate and move sideways for a while as the macro environment is changing. All right, that's Ambarella. I still love it. It's really good. Hut 8. Okay, miners are getting hurt. All the miners are getting hurt. The one thing good about Hut 8 here is that it is bouncing on its 200-day moving average. That is a positive for the structure here. Now, if we look here at that 200-day moving average, that is at $7.63. But right now, the reason miners are getting hurt is because investors had this expectation that miners, if they were mining, say, 5 Bitcoin per day, then investors were saying, well, if they're mining 5 Bitcoin per day, why can't they mine 8 Bitcoin per day or 10 Bitcoin per day? Or better yet, why can't it mine 5 Bitcoin every day for eternity? Well, as crypto investors, we know that answer. There's a finite amount of Bitcoin. And after each halving event occurs, it becomes harder and harder and harder to mine Bitcoin. For example, if a mining company is mining 5 Bitcoin per day right now, in 6 months from now, they may be only able to mine 3 Bitcoin per day. So with the miners, number one, they're connected in one of the strongest ways to Bitcoin. If Bitcoin goes down, typically the miners go down. If Bitcoin goes up, then typically the miners go up because they're mining Bitcoin. They're holding Bitcoin. But there's also the simple fact that miners are going to have problem sustaining the amount they are mining. So for investors, that's really hard for them to wrap their minds around, to understand that in the crypto market, specifically Bitcoin, there's only going to ever be 21 million Bitcoin. That's it. There's never going to be a single Bitcoin more or less, for that matter. So as miners continue, they're going to be mining less and less and less. Now, if they are holding that Bitcoin, which they do for the most part, then of course the value of what they're holding is going up. But that doesn't mean they're making more profits. And as a publicly traded company, if they're not making profits, then they're not going to have investors. And they have to sell some Bitcoin in order to pay for the mining itself, the electricity. Now, Hut 8 Mining is one of my favorite miners. They do tend to seem to be a little more on the greener side, using renewable energy sources compared to some of the other miners. So I do like it, but it's going to be very volatile, and it's going to be difficult for your normal investor to understand the business mechanics of mining cryptocurrency. So for Hut 8, it bouncing on its 200-day, kind of wobbling right there along it, that may be what it does for a while. So yeah, that's what I think about the miners there in general terms. And again, Hut 8 is one of my more favorite mining companies. But yeah, they also mine Ether. Yes, they do. Not as much as Ethereum, but they do mine Ethereum as well. And you have the same, nearly the same problem. Ethereum is a little bit different. But the one thing that I think is positive about Ethereum is when Ethereum upgrades its network, right, in the first half of next year, that's going to be a really big catalyst for Ethereum. And any of the miners who are mining Ethereum, that'll help to boost their stock as well. But I again, for the short term, because I don't think many investors really understand what mining cryptocurrency is all about. So I think it's going to be volatile for a while, a long time. I'm not even sure if volatility will ever come out of crypto mining companies. Let's see here. Yeah, got that on the Ethereum. Yeah. And are able to mine any other coin on the Ethereum network. Yes, that is true. But a lot of investors, your typical average normal investor, they know Bitcoin. They probably know Ethereum, but I highly doubt they know too many other of the cryptocurrencies. So yeah, I like HUD 8. I just don't think that they're going to. I just think the volatility is going to continue for a while. I mean, if we go look at Bitcoin and Ethereum right now, they're down today. Bitcoin's down 2. I went on the wrong one. I don't have my lines here. Down 2.6%, and Ethereum is down also. But look at Bitcoin. We've had this drawn here for a while now. This 200-day moving average, I think, is very important for Bitcoin. And that 200-day moving average is at 46,974. That's what Bitcoin needs to stay above. And it's at 47,552 right now. Okay. So it's a few $100, 800, no, about $500 away from that 200-day moving average. And today it got as low as 47,524. So it's not too many tendies above its low of the day, but yeah, it needs to stay above this $200, 200 moving day. I really think it needs to stay above that. And then for Ethereum, and another thing too about this 200-day moving average, the $50,000 level, it's such a big psychological level for investors. And Bitcoin falling below it has really put this thing in a downtrend. We could actually probably, if we start at this bottom here and run this up like this, it's catching a lot of them. And let me clone this. I'm gonna move this over. No, it doesn't quite fit. So it's not in its own, it's not in a channel. That one doesn't fit. So, but with that one line there, I mean, we can see that it's been moving down, and if it falls below that 200-day moving average, then that's just not going to be very good for Bitcoin right now. To me, it needs to get back above the $50,000 point. I mean, today it got to 48,878, and that was it. And yeah, something weird too with Bitcoin. But let's go to Ethereum, ETHUSD. And let's look at that. Microsoft entry point 288. All right, I'll look at Microsoft in just a moment. See Ethereum here. Ethereum is performing better than Bitcoin. It's down 0.96% right now. It is under that all important $4,000 mark. It's at 39.82. It got as low today of 39.65. So it's just off its lows for the day. But yesterday it was up 4%. Had a great day. But it's just in this continuation pattern. You might be able to start seeing a downtrend here, just maybe, if we put the lines there. But it's really just in this slow move sideways. All right, Microsoft. MSFT for Microsoft. All right, so Microsoft is loading there for us. All right, nice hold right there above that 50-day moving average. That was really nice for Microsoft today. All right, so for me, Microsoft has run up pretty. I mean, look at that. I gotta fix this chart. There we go. Microsoft has run up pretty far. Trying to get just a little further. All right. I mean, look at how much Microsoft has run up since the bottom in March of 2020. I mean, let's see what it was down to $139. But on its way, it's had a couple of areas of sideways consolidation. And look at this. This is interesting. So today it had a nice little bounce and then rest here on its 50-day moving average. And then it touched that 50-day moving average on December 6th. And then here at the end of September, it fell below that 50-day, but it bounced right back. And here were just a couple days where it was below it, but it bounced. It's been, my point here is Microsoft has been using its 50-day moving average as support nearly the whole way. The biggest section of time has been the beginning of September 2020 to the beginning of November. So for 2 months, it was moving sideways and it was bouncing under and back above the 50-day moving average. It was above it, below it. So for Microsoft to be here, it looks to me like it's setting up to move sideways, like it's done several times before. Let me take this line I had drawn here and extend it out a little further. That's almost like a resistance line there. And let's try to find that support one. So the bottom of that candle and the wick of that candle, that lines up real nice. And then over here, it catches that candle there as resistance. So it's possible that it's going to start moving sideways. All right. So for me, Microsoft, it might take some time for it, but it may not fall under this 50-day moving average. Okay, but the overall market is changing, which is giving a different environment for where Microsoft has come from and where it could be going. Now, this move sideways right here, I mean, the 21-day moving average is like straight. Volume has been increasing. However, the relative strength has been decreasing. So we've got a divergence. Look at this. Volume is increasing. That's the average volume. And then we've got right here, we've got the RSI decreasing. So that's a divergence right there between the two. And we can actually go all the way back here and meet that same point right there on the RSI. I'll take that shorter one off. So you can see there's a big divergence between volume accelerating while the relative strength is decelerating. It's at 4750 right now, the RSI. Now, if it does break below this 50-day moving average, There is a gap up, a small gap up right here that it would have to fill. So where could be the next step down that it could take? Well, let's see, probably right about 304, maybe 305. You're looking at 288 for an entry point. For Microsoft here, I think right here between 305 and 311 could be a base there. What you're looking for at 288 is just above that 200-day moving average, and that would be a really nice place to enter. Anything under that 200-day, the 200-day moving average is at 282. So your 288 is really close to that. And I would say that would be a great entry point. I mean, if you look at 283 right here, 281, 282, yeah, there's support right here if it were to fall that far. And that's about where it was starting to. So there's actually, looking at this now, okay, so at the 200-day moving average, say about 282, up here to 304, that's where it was range bound from July 21st to October 1st. So for several months, it was range bound in between 282 being the low point and 300, 304 being the high point. So I could totally see it coming down here to that 282. So 288, that would be a good entry point. I think anything in this range here, and let's just do this. So the next time we come back and look at Microsoft, I'm going to put a circle right here. This is like, that's where we want Microsoft to fall to. That's our target right there. Wait, should I make it like a bullseye to show our target? I don't know how well I can draw circles though. Oh, that's a horrible circle. All right, so that's our target there for Microsoft right there. Your 288, that would be a good entry point. It could get as low as that 200-day, but that 200-day moving average. But that 200-day moving average, if Microsoft continues to fall, that 200-day moving average will continue up, and then it'll slowly start to bend down if Microsoft is falling down. So if Microsoft comes down to our target here, that 200-day, it's going to rise for a little longer, but then it'll start, it'll get to this reflection point here and then start turning down. So this is probably a really good target right here. Under $300, above 280, 282. Okay. So there's Microsoft. That looks pretty cool. Any other questions? I think I've gotten to all of them. That's what we're here for. I know I haven't talked about the Fed or Adobe or any of that, but that's fine. I'd rather talk about what's on your mind. So if you got any other questions, just remember this though, guys. If you have not, I know I did this at the beginning, but this is really cool. This is free money, literally. It takes just a small amount of your time. Sign up for Webull. Use the link at the top of the chat. tickertimenews.com/Webull. It's the second link in the description. Sign up for Webull, get 5 free stocks. 5 free stocks. And you can deposit any amount. It's not like you have to deposit $100 in order to get it. No, no, no. Sign up for Webull, open an account, deposit any amount, get 5 free stocks. It's that simple. That is free money. So please do that. That does help to support the channel. If you haven't signed up for Webull yet, again, the link is at the top of the chat, and it's the second link in the description of the video. Go do that. Get free money, 5 free stocks. That's a really nice Christmas gift, Hanukkah gift, whatever your religion may be. It's a nice, free, effortless, really, way for free money. 5 free stocks. And this only lasts until December 31st. So do act quickly on it. Okay, for tomorrow, I did want to talk. Oh man, I didn't even talk about these guys. For our Catalyst Watch post that I made, I talked about Accenture. They reported their earnings today, and they were spectacular. Ticker symbol is ACN. Excuse me, ACN for their ticker symbol. Look at this. They were up 6.7%. I knew this was going to happen. It got all the way up here. Here's the no, get out of my way. The candle is up here. The tool's in my way. But here's the candle for today. It popped all the way up there. Now, I would not buy it up here. It got as high as $413.65. That was a new 52-week high. And their earnings are spectacular. Oh my goodness, they are so good. So good. This is a company. If you go to our website, tickertimenews.com, you can also get to the 5 free stocks, tickertimenews.com/Webull, WEBULL. But on tickertimenews.com, I posted the Catalyst Watch post right here, and we talked about Accenture. And the company has outperformed revenue estimates 10 out of the last 12 quarters, and it's beat EPS 11 out of the 12 past quarters. So this just makes their win streak even more impressive. I mean, look at that stock chart. That's beautiful. Okay, well, I guess that will wrap it up here. Do please take advantage of that free money. And since I don't see any other questions coming in, I'll go ahead and wrap the stream up here. Thank you guys so very much for being here with me. I greatly appreciate it. I will be back here tomorrow at 5 p.m. Eastern for another go at the market. But go ahead, take advantage of that free money, tickertimenews.com/Webull, and I'll see you guys in the next video.